Hi class, a pleasant day to all of you. This is your Professor Dan, and in this video we are going to discuss the lesson on subscription of shares and delinquent subscribed shares. Okay class, first is that we will illustrate first the regular journal entries with regards to subscription of shares. And this is our problem. XYZ Corporation sold 8,000 shares of 10 par value ordinary shares on subscription at 12 per share to Mr. Cruz on May 1st, 2019. 20% of the subscription was paid on the same day, meaning on May 1st. The 40% and 60% of the remaining balance are due on May 30 and June 15, respectively. First, these are the required things that we are going to determine. Number one, record the subscription. When was the subscription? May 1st. Then record the payment on May 1st as well. Then third, Mr. Cruz complied with the agreement. The agreement referring to the payment of the remaining balance on May 30 and June 15. Then fourth, record the issuance of tax certificate. Okay, class. So our journal entry on May 1st for the subscription is that we will debit subscription receivable of 96,000. 96,000 is computed 8,000 shares times the subscribe price at 12 per share, so that will be 96,000. And credit subscribe ordinary shares of 80,000, 8,000 times the par value of 10, and the difference credited to share premium. The next is we will record the payment on May 1st. So we will receive, the corporation will receive cash from Mr. Cruz of 19,200. Why 19,200? 96,000, and the payment was 20%. So that is 19,200. And the next is that Mr. Cruz complied with the agreement. So Mr. Cruz will pay on May 30 40% of the balance. So that will be computed based on 96,000, which is the total subscription receivable, minus 19,200, the payment made on May 1st, that is the resulting remaining balance, and times 40%, that will give you 30,720. And next will be the journal entry on June 15. And June 15, it will still be 96,000 minus 19,200, and the remaining balance for the full payment is 60%, so that will be 46,080. Okay, so here if you will add all the payments, 19,200, 30,720, and 46,080, that will give you the total subscription receivable of 96,000. Since that it is already fully paid, so the corporation, XYZ Corporation, should now issue the tax certificates to Mr. Cruz. So in the issuance of the tax certificate, we will do the preparation of journal entry on the day that it was fully paid, which is on June 15. So the entries will be debit subscribe ordinary shares. So we will now remove the subscribe ordinary shares here of 80,000, which is in your entry number 1, because it has already been paid, and then credit now because you are now issuing the tax certificate, so you will be crediting share capital at 80,000. Okay, class, this is the basic journal entries with regards to subscription of shares. Okay, class. However, there are situations that subscriber failed to settle payment. Okay, so we will have an illustration. So our situation is this: on September 1st, Mr. X subscribed 5,000 ordinary shares with par value of 10 at issue price of 12 per share and paid 12,000. So on September 1st, Mr. X subscribed 5,000 ordinary shares, and the payment made on the same day was 12,000. The balance on subscription is due on September 16th. Okay? So here, class, we have first to record the subscription. So here on September 1st, we will be recording the subscription, and the subscription receivable will be calculated based on the number of subscribed shares, which in this case is 5,000, times the uh, subscribe price of 12 per share. So 5,000 times 12 will give you 60,000. And credit subscribe, so we cannot issue yet because it's still subscribed. So credit subscribe ordinary shares of 50,000, which is 5,000 times the par value of 10. So that will be 50,000, and the difference is your share premium. Okay? So this is with regards to subscription. And we also have to record the payment made on September 1st. Here it indicated that on September 1st, there was a payment of 12,000. So the corporation will debit cash of 12,000 and credit subscription receivable of 12,000. Okay? So take note, class, we have to record first the subscription and then record the payment. Okay? And take note, class, for the subscription, we will credit subscribe ordinary shares. Okay? It still has to be subscribed. Okay, class. And the situation next after this is that Mr. X failed to settle the subscription on its due date. When was the due date? September 16. And Mr. X did not settle it. Thus, the board declared the subscription delinquent on September 30. On October 31st, the company paid advertisement of 5,000 for the public auction. Okay, so since that the board has already declared that the subscription is delinquent, so the course of action that the company could take is to do an auction for the subscribed shares. So the company included accrued interest of 12% on the offer price. Okay, class. What is the next entry? The next entry or the next date is on September 30. On September 30, the board declared that the subscription was delinquent because uh, it was not paid. The balance is due on September 16. Mr. X did not pay it on September 16. On the due date, there will be no entry. There will be no journal entry on September 16 when Mr. X defaulted payment. Take note of this, class. When Mr. X defaulted on September 16, he did not pay. There is no journal entry, okay, because there was no transaction. It was just non-payment from Mr. X. However, on September 30, there was an action from the corporation. The board of the directors declared that the subscription was delinquent. So in this case, on September 30, then when board declared that subscription is delinquent, then we have to close the subscription receivable. So meaning whatever the balance of the subscription receivable, okay, we have to close it. So here, based on our journal entries from 1 and 2, we have a debit of 60,000 and we have a credit of 12,000. So in effect, there was still a balance of 48,000 debit. Okay, so we have to close that. To close that, we will use the account receivable from highest bidder because we are going to put this in auction, in public auction. So whoever wins, then we have a receivable from that person, okay? And credit the balance of the subscription receivable. Okay, class? So take note, at the time of the board declared that the subscription is delinquent, we have to make sure we will close the subscription receivable. Okay, and now
Yes,
let
nice
us
already.
proceed. On October 31st, the company paid advertisement of 5,000 for the public auction. So it's now on October 31st that they will proceed with the public auction. So the company will pay the auctioneer or the one who will handle the public auction the expenses of 5,000. So in this case, the company will record the payment made for the auction expenses as receivable from highest bidder of 5,000. Okay, the payment will be made to the agency or person who will handle the auction. Okay, or any auction expenses. And then, since that there was here an information that the company included accrued interest of 12% on the offer price. Okay, so we also have to include that, the interest. Okay, the interest is calculated, okay, from the time that the the payment, the balance on subscription, which is due on September 16, and the Mr. X did not pay that. So the company can calculate it from September 16 up to October 31st with regards to the interest. And this is 45 days if you will compute it. 16, 30 for September minus 16, that will be 14 days plus 31 days on October, that will be 45 days. So doing the calculation of interest, you will have 720 here. Okay, class. So now we were able to charge everything to the highest bidder. But we don't know yet who is that highest bidder. The company is still doing the public auction. So now the company received three bids from the following after the public auction, and these are from Mr. Mar, 4,300 shares, Mr. Binay, 4,500 shares, and Mrs. Bo, 4,700 shares. So these are the bids of these three persons. Okay, class, what are the things that we should do? What are the considerations, accounting considerations with regards to this? Okay, so these are the bid price. So class, what we have to do is that first, compute the offer price. In normal situations, the offer price will be given, but in case of classroom problems, the offer price may not be given. So we have to determine the offer price. Second, we have to determine the highest bidder. So we received three bids, but which of these persons gave the highest bid? Okay. Okay, let us first compute the offer price. The offer price is that the balance of subscription plus any auction expense and plus accrued interest because it was stated in the problem. So in this case, the offer price, which is 48,000, which is the balance of the auction, the auction, the balance of subscription rather, and the auction expense is 5,000 and the accrued interest is 720. So we have an offer price of 53,720. Okay? So class, to determine the highest bidder, the computation is that this offer price, we divided it by the number of bids. Okay? The number of shares for the bidding. So in this case, 53,720 divided by 4,300 shares, that will give you 12.49 per share. And for Mr. Pina, it will be 53,720 divided by 4,500 shares equals 11.94. And Mrs. Po at divided by 4,700 will give you 11.43. So based on this class, Mr. Mar gave the highest uh, bid, which is 12.49 per share. Okay, so Mr. Mar is the highest bidder. Okay, so class, Now we were able to determine the offer price of 53,720, and the highest bidder is Mr. Mar. Okay? So let us continue, class. So this is what we have. The next is now we are going to record the journal entry on the sale to Mar and the issuance of stock certificate. So in this case, we are going to receive cash from Mr. Mar, and the cash that are going to receive is the offer price. So we will debit cash of 53,720 and credit receivable from highest bidder. Okay? And now, class, we are going to issue now the stock certificate to Mar. And then how many shares that Mar is entitled to? Mar has bidded 4,300 shares. So we are going to issue a stock certificate worth for 4,300 shares. At what? At par value, which is 10. Okay? So we will now have to debit subscribe ordinary shares because it was still in the subscribe, and since Mar has already made a full payment on that, so we will debit now subscribe ordinary shares and credit share capital ordinary shares of 43,000. Of course, 43,000 is computed as 4,300 shares times its par value, so that is 43,000. Okay. Take note, class, that this 43,000 is only for 4,300 shares. What was subscribed is 5,000. Okay? So there is a remaining of 700 shares. And these 700 shares, okay, since Mr. X has already made partial payment, that is the now the number of shares for the partial payment of the subscription that he made, which is 12,000. Okay, the corporation now will issue a tax certificate of the difference of 700 shares to Mr. X. So that will be now an entry stock certificate will be issued to Mr. X, which is for 700 shares times the par value of 10, so that is 7,000. So then it's debit subscribe ordinary shares 7,000 and credit share capital ordinary shares 7,000. Okay? Class, what if the situation is that there was no bidder? If there are no bidders, then Mr. X can bid for his own shares. And if paid in full by Mr. X, then the stock certificate will be issued to him for the 5,000 shares. Of course, it is a given thing that if Mr. X will make a bid, then at that time that he is making a bid, he has the capability to pay what he is bidding. Okay? So in this case, then the 5,000 shares will be issued to Mr. X. Okay? So what Mr. X should do is pay the 48,000 plus the auction fee plus the accrued interest, which is amounting to 53,750. So Mr. X should pay the offer price. Okay? And instead of if he did not if it is not delinquent, then he should only pay 48,000. But because he was delinquent, so there are additional auction expense and interest expense that he needs to pay. Okay, so if there are no bidders, Mr. X can bid for his own shares. Okay, class. Okay, and then there will be an issuance of the shares because he has already made the payment. Then the stock certificate will be issued to Mr. X, 5,000 shares now times the 10 par value. So the entry will be debit to subscribe ordinary shares 50,000 and credit share capital ordinary shares 50,000. Okay, class? So that's it, class. The next slide is about presentation of subscription receivable. First, if the subscription receivable is callable, okay? What is the meaning of callable? Okay, it has to be meaning you can demand payment. So if it is callable within the year, it will be presented as current assets. So in this case, the subscription receivable is presented by the corporation as current assets. Okay, 27,500 if this is the receivable. And if it is more than 1 year, it is presented as non-current assets. So instead of here, it will now be part of the uh, non-current asset as subscription receivable. Okay, class? What if it is not on call? Okay, if it is not on call, then it will be presented as a contra shareholders equity account, meaning decreasing the subscribed share capital account. Okay, class. So here, if we have here the statement of financial position, then it will not be presented here as current asset if it is not on call. It will be presented here as a reduction from paid capital from the subscription. Okay, we are reducing this. There was here a subscribed shares of 250 shares. Then the subscription receivable from that subscribed shares will be deducted if it is not on call. Okay, class? So that's it. If you have questions, please let me know. Have a great day, class, and stay safe. Safe. Bye for now.